Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a great weekend. Next week is a big week for the markets. We have 3 interest rate decisions next week plus non-farm payrolls. I tweeted last week about the major breakout in the dollar index to the upside, a new trend potentially forming here. This is not clickbait, this is not alarmism, this is really happening, and we're going to look at that more in today's video. And what's important is we also have FOMC on Wednesday, which is the key event for next week, and all of the markets across the board are likely to be waiting until this event takes place before finding direction. So as usual, I'm going to go through my trading plan with you, and we're going to look at the best setups for next week. But with so much going on next week in terms of economic data and events, the number one priority next week is keeping your capital intact. So a quick look at the economic calendar before we move to the charts. You can see the French presidential election didn't really have much of an effect on the market, so we can skip this. It's not something we need to pay attention to. What was important last week were 2 things. One was the BOJ, which came out and reaffirmed that it's going to continue to buy bonds. We discussed the bond purchasing program in last week's video. For those of you who didn't see that, it might be worth going back and watching that. But they are going to continue to buy bonds in an unlimited quantity. And this is fundamentally applying downward pressure still to the yen. And we also have US advanced GDP, which came out at minus 1.4 for the quarter. Don't forget, a recession, a technical recession, is defined as 2 consecutive quarters of negative GDP. So another 3 months of that or another quarter, and you have a technical recession in the US. Now, we're having a quick look at that here because when we go through the charts and we talk about FOMC on Wednesday, it's just something to bear in mind. If we have a look at the economic calendar for the coming week, however, you can see we have an interest rate decision out of Australia on Tuesday. We have an interest rate decision out of the US on Wednesday. And we have an interest rate decision out of the UK on Thursday. And on Friday, we have non-farm payrolls. So as you can see, there's a lot going on next week. And this is why my priority next week is to preserve my capital. That doesn't mean I'm not going to be trading, but it means I'm going to be taking less risk. And certainly, I would imagine most of my trades will come from Wednesday onwards next week after FOMC. There may be some opportunities to position into dollar pairs before FOMC if you have the risk tolerance for that. But 8 times out of 10, I like to wait for the interest rate decisions to pass before I trade those currencies. And so those are the key things to look out for next week. We also have some bank holidays on Monday and Tuesday, which again just feeds into the idea that we're probably going to see the markets doing nothing between Monday and Wednesday, and then or correcting, and then moving from Wednesday onwards. So if we have a look at the scorecards for the coming week, you can see in last week's video, I highlighted the US dollar as the best play. And I said to you guys that I think this is where the money is going to be most easily made in the US dollar to the upside. And we looked at those setups in last week's video. The week before that, we looked at the Swiss franc. I said the same thing. The Swiss franc looks set to actually have a big move, and we had a really big sell-off in the Swiss franc. And coming into this week, it's really the US dollar holding up as the best currency once again. And you can see from last week, we've had a strengthening of the US dollar. And we've also seen a relative strengthening of the Canadian dollar. Those were the 2 longs we were looking at, US dollar CAD. Although if you remember from last week's video, the CAD itself was actually fairly weak. It's just relatively strong compared to the other currencies because of the current price of crude oil. And so once again, going into this week, my top 2 long positions are going to be US dollar and the Canadian dollar. The Australian dollar is still at +1, which is bullish to neutral, but don't forget this came off overbought levels of +4. So the direction of the Aussie is actually to the downside. So I wouldn't be surprised to see the Australian dollar continue. It was at the top of the leaderboard and it started to move from left to right. I wouldn't be surprised to see this now moving further to the right. Why? Because as the DXY strengthens, you're going to see the Australian dollar suffering the most, generally speaking. And so I would say in the coming weeks, we're likely to see the Australian dollar slip further down the scorecards. Going into this week, the 2 weakest currencies are pound and yen, and pound was one of the best shorts from last week. We actually weakened, and we looked at the pound shorts in last week's video. But the final thing to note is that although the Japanese yen is one of the weakest currencies, it's actually coming off of oversold levels. And again, just like the Australian dollar is moving from left to right, this is somewhat moving from right to left. So it's not just where the scores are now, it's where they're coming from, which is important as well. And for that reason, I actually prefer New Zealand shorts over Japanese yen shorts this week because you can see the New Zealand is weakening. Even though it scores slightly higher, it's actually moving from left to right, as is the Australian dollar and also the euro. The euro is also moving from left to right, even though it only scores -1. So the pairs that I'm going to be most focused on next week, our number one priority, the US dollar, and we're going to be looking at the FOMC meeting on Wednesday for direction, not just in the dollar. As I said, you're likely to see it give direction to all the markets. And that, of course, is because of the US dollar's role as the global reserve currency. After dollar strength plays, I'm going to be looking at Canadian dollar strength plays. And to the downside, as I said, primarily I'm focused on the pound and the New Zealand, euro, and also somewhat the Aussie. Although because it's still bullish to neutral, I don't favor Aussie shorts as one of my best or favorite opportunities just yet. And so the real three currencies I'm looking at shorting this week are pound, New Zealand, and euro. So when we're going to have a look at the charts, we can look primarily towards pound dollar to the downside. We can look at New Zealand dollar to the downside, euro dollar to the downside I'm going to be looking at, and somewhat Aussie dollar to the downside, although not as much as these three currencies over here. We're also in today's video going to be looking at pound CAD to the downside, which I like. We're going to be looking once again at New Zealand CAD, and a number of these are opportunities we looked at in last week's video that worked really well. So essentially, I'm looking for these plays again and for the continuation of the setups we looked at, and I hope many of you profited from last week. And finally, again, we can look at Aussie CAD, but it's not going to be one of my best pairs next week, but you can put it on the table and keep an eye on it just in case we see a real weakening of the Aussie next week. Okay, so let's start with the US dollar index. First and foremost, we took out both targets to the upside last week. And as you can see, I've drawn on the 102.99 here in gold. Why? Because this is the major breakout point in the DXY, which I covered in the thread, which I wrote on Twitter. Again, you can click on the link in the description below if you want to read that thread. And I've also put the link in the comment, the pinned comment to this video. But if we scroll out a little bit here in the DXY, you can see the basis of this is that this failure to make a low down here and the rebreak of the 102.992 is how major trends start. That is how they start. A lot of you would describe this as a wave 2, and this would be the beginning of a wave 3. Personally, I'm not big on Elliott wave, but if that kind of description helps you to understand what we're looking at here in terms of a new trend being born, then that's the way you might want to think of it. And in the Twitter thread, I look at yearly charts, monthly charts, and I cover multi-year, even multi-decade consolidations, which are breaking in that thread. And what's really fascinating about this breakout to the upside is when do you get, generally speaking, a continuation and new trends being born when you get this kind of setup? You get it when you have a major fundamental catalyst, and very often on much smaller charts, you will get that from an interest rate decision. And of course, we have an interest rate decision next Wednesday. Now, one scenario I see a path to which can send the DXY through the 102.99 and therefore kickstart a major trend to the upside is an unexpected rate hike of 75 basis points next week. The market expects the Fed to raise by 50. However, the Fed really has to get a handle on inflation. It has to do it pretty quickly, and it cannot raise rates to 20% like it did during the Volcker era because of the interest repayments that would be required on US debt. The US debt is too high. So they almost don't have that tool in their toolbox. They can't raise rates to 20% now. But what they can do in order to try and gain some ground from being behind the curve, because they are very, very far behind the curve. In fact, normally you need to raise interest rates generally above the rate of inflation, you could say, as just a very basic definition of what's required to control inflation. However, if they're unable to do that, what they can do is they can raise rates quicker than expected, and they can cause an impact on aggregate demand by doing that. Because when you raise rates in a steady, premeditated way and the market knows how rate hikes are going to take place, when and where, it actually has less of an effect. And conversely, if you unexpectedly hike, it has more of an effect. So although the Fed can't raise rates very high, it can raise them quicker than expected. And that is a tool it still has in its toolbox. And it may be one of the only ways it can get aggressive is by putting out unexpected rate hikes because, as I said, they don't have the ability to put very high levels of interest rates out there. So that's one scenario which I would absolutely look out for next week. And I think there's a real chance that could actually take place, and that sends the DXY higher. And when everybody is expecting exactly what happened last time to take place on Wednesday, which is that the dollar rallied, the Fed came out aggressive and hawkish, stocks were selling off, and then on the actual event itself, stocks rallied and the dollar sold off. Everybody seems to be anticipating that happening again, but I question whether we'll get that unexpected rate hike and fuel to actually propel the DXY further to the upside next week. Again, it's very tough to say what the Fed's going to do in advance, but just keep an eye out and bear that scenario in mind next week. So the next target to the upside is the 104.92, and it'll be interesting to see whether we can hold above this major breakout level of the 102.99 next week in the dollar index. Next is the euro. We took out both targets to the downside, and we're looking really at the inverse here of the DXY. In the euro, the 1.06710 is the major breakout level to the downside and where you would expect a new trend to start. And we came through here with momentum. That's usually the first sign that the breakout is successful. So it does look to me, especially if we get an unexpected rate hike next week, it does look to me like this is going to continue to the downside. I wouldn't be surprised to see this market pulling back between Monday and Wednesday, just as the dollar is probably going to pull back and correct or consolidate above that breakout level between Monday and Wednesday. And then further declines to the downside after FOMC on Wednesday. It's important to note that if we get the opposite happen and the market rallies on FOMC, it may be difficult to trade the US dollar pairs next week because they're right at the top of a big move to the upside in the DXY. So you really want to see a continuation of that trend from the Fed meeting to get the best opportunities out of the dollar pairs next week. Next is the pound. We took out both targets to the downside last week. This was a really good short highlighted in last week's video. Coming into this week, any pullback in this market, preferably between Monday and Wednesday, is going to be the opportunity to look for bearish reversals. So we get FOMC and we break down like this. That's going to be your opportunity to look for any short entries into the 1.2350. Of course, we'll not be looking to trade the pound futures themselves necessarily speaking, but that scenario would play out with pound dollar to the downside, which we're going to look at in a bit. Next is the Swiss franc. Now, you don't need to really even be in the markets for very long to know this is bearish. I mean, this thing is just straight down, just like the euro, just like the pound, etc. We did take out all three targets and we finished the week right at the third target. Going into this week, I would expect to see a correction in the Swiss franc before further declines to the downside. And if I was going to be trading Swiss franc pairs, I would be looking to be short the Swiss franc. This is also in line with the S&B. They want to see the Swiss franc devalued. So really, the bias is weighted to the downside in Swiss franc. Next is the Japanese yen. Now, the Japanese yen also broke a major breakout level of 0.007945. If we zoom out here in the daily chart, you can see for yourself the breakout here. That is a major, major breakout. And you can see it's actually a head and shoulders breakout. And this has massive ramifications for the Japanese yen, but also the dollar, because if we continue to see the US dollar, or rather if we see the Japanese yen selling off, you're going to see that money flowing somewhere, and it's flowing into the US dollar. So the continued policy from the BOJ of buying an unlimited amount of bonds is actually sending capital flowing into the dollar as well. It's another reason why I think this breakout in the dollar to the upside has some legs. I am still bearish on the yen. You can see it might be running out of legs here. Any pullback, though, is still viewed as an opportunity, especially a retest of this level, to start to look for a sell-off down towards the 0.007598. Next is the CAD. Now, the CAD in and of itself is weak, and that's where when we look at the currencies down here, yes, I do like pound CAD, I like New Zealand CAD, but the CAD itself is not a great long. It's just a good buy relative to some of these other currencies, and especially the New Zealand and the pound. So I wouldn't go too crazy on CAD long positions, because if you compare what we're seeing here to what we're looking at in the dollar is clearly a good buy, whereas the CAD is just not as bad a short as the other currencies, hence why pound CAD to the downside, New Zealand CAD to the downside we're going to look at. Aussie dollar, we took out the target at the 0.7171, and again you can see this is really quite a bearish chart. It is kind of bullish to neutral on a relative basis. However, I wouldn't be surprised to see this correcting and making its way down to the 0.6994. So I am prepared to look at Aussie dollar to the downside. We can also look at Aussie CAD, but certainly I prefer Aussie dollar because the dollar is the strongest currency. And last but not least, we have the New Zealand dollar. We took out the target at the 0.6528, and the break of this low is what? It's a continuation of the overall downtrend. So any pullback in this market, I am looking for moves down to the 0.62410. And when you zoom out here on the New Zealand, I mean, there is nothing but air between where we currently sit and the 0.62410. We could be coming down here quite quickly. And for that reason, I do like New Zealand shorts going into next week as well. So let's move on to the markets themselves, but just very quickly, we need to look at the stock market. I highlighted this in last week's video. We're approaching a major structural failure right at this level here, the 4114.65. I did call back on this day, in fact, that I believe US stock market was going to crash. We have essentially started to crash since then. And if we take out the 4114.65 next week, don't be surprised to see real capitulation to the downside, because for those of you who read the thread on the DXY, it's exactly the same breakout mechanics that are likely to take place here in the stock market. Those who are long down here, who bought the dip, they have stop losses over here. The reason we're starting to crash in this area is because a number of these people who are already long in this area are covering their long positions. This causes an acceleration to the downside. New traders are adding shorts. This makes it go even faster. And there are going to be some traders down here who refuse to accept a loss. Say they bought, instead of down here, in fact, say they bought up here and the market's here, they don't want to accept this as a loss. So they've got stop losses down here, and when they get taken out, you're going to have more long covering on a break below the 4114.65, and you're going to have new traders adding short positions on the breakout. So you could see a very strong sell-off on the 4114.65, and it's interesting that we are approaching a major breakdown in stocks right as the Fed are meeting next Wednesday. And I think if the Fed gets this wrong on Wednesday, you could be seeing some real problems in the stock market. Now, again, I just remind you of what happened last time the Fed met. The market was selling off, and then on a very hawkish Fed, the market started to rally. It didn't actually get very far. You can see it topped out over here. But in terms of the Forex markets, if we break the 4114.65, you're likely going to see a big sell-off, a flight to safety, and this would normally be benefiting the Japanese yen and the dollar. But because of what's going on in the yen, it really is leaving one man standing. I mean, even the Swiss franc is being devalued by the Swiss National Bank. It's really only the US dollar which has a safe haven status when you see markets, stock markets crashing or selling off hard. And at the same time, out of the three, Swiss franc, Japanese yen, and the US dollar is the only one where the central bank is engaged in a tightening cycle. And this is why I'm prioritizing over and above everything else, dollar strength. So keep an eye out for the 4114.65 next week. And if you want a little bit more info on this, you can look at last week's video where I covered the NASDAQ, the Russell, and the Dow Jones a little bit more as well, and highlighted their major breakout levels to the downside last week. Okay, so starting with crude oil, and crude oil is still bullish. I am looking overall for a target of the 113.88. The problem I have with crude oil is, although it is currently at a price of 104, primarily based on the supply side, if the US goes into recession, this is going to have an effect on the demand side. You are going to see crude oil coming down, especially if there's a market crash. Crude oil is going to get whacked. So I'm not massively bullish on crude oil, but on balance I am bullish, and I certainly would be looking at this as being supportive of the Canadian dollar, and it just feeds in. Instead of trading crude oil to the upside, personally speaking, I would rather reflect this outlook on crude oil in a long Canadian dollar position versus the pound versus the New Zealand, as opposed to being long crude oil itself. If you want to trade crude oil to the upside, that's what I'd be looking for, but I personally would prefer to leave crude oil longs because of my strong bias on the dollar and its potential deflationary effects. Next is pound dollar. Now, I believe last week this was actually my number one trade or setup to the downside. We took out both targets and then some last week in this market, so really nice short from last week. Going into this week, I am looking for further declines, and as it currently stands, what I'd like to see is a pullback between Monday and Wednesday, and any breakdown from Wednesday like this is going to be the opportunity to start to look for shorts once again into the 1.2343. Next is New Zealand dollar, also a short from last week. We took out the target set at 0.65390. Any pullback in this market, preferably between Monday and Wednesday, will be the opportunity to start to look for a break to the downside, especially on FOMC. And any breakdown is going to be viewed as an opportunity to look for shorts into the 0.6384. Next is euro dollar, highlighted as a good short opportunity last week. This was one of my high conviction setups. We took out both targets and we broke the 1.06359, which was the major breakout level which euro dollar starts a new trend to the downside. We broke this with momentum. So you already have indication number one that this is going to be potentially a successful breakout. What comes out of the Fed on Wednesday could very well, in my opinion, propel this further to the downside. So we took out both targets last week. Going into this week, what I would like to see is any pullback, and between Monday and Wednesday, I'd like to see this pulling back, retesting the major breakout level and just consolidating. That would set up a really nice opportunity on Wednesday. If the Fed comes out and we see this breakdown like this, that's the opportunity to look for any pullback near term, and I'm going to be looking for shorts into the 1.0341. Next is Aussie dollar, highlighted last week, and we took out the 0.71580. As we start to transition between stagflation, where the Australian dollar was outperforming alongside the US dollar, into a more deflationary scenario, we are seeing Aussie rolling over to the downside. And I tweeted this out a while ago, we're going to see stagflation turn into deflation. And the fact that the Aussie is now starting to underperform the dollar is a sign from the Forex markets that we are transitioning from stagflation into deflation. So any pullback in this market, and preferably I'd like to see this correcting between Monday and Wednesday, and then on FOMC breaking down like this with a sharp sell-off. Any small pullback here would be the opportunity to look for shorts into the 0.6988. And those four markets there are my key FOMC trades that I'm going to be looking at next week. Next is US dollar Swiss franc, highlighted as a good trade to the upside last week, and we had a really nice move up, took out the target and almost got towards target 2. Going into this week, any pullback in this market is still once again viewed as an opportunity to look for long positions into the 0.9790. Just as with last week, it's not highlighted as one of my favorite plays because both the US dollar and the Swiss franc are a flight to safety play, and so you do have potentially lesser moves to the upside in US dollar Swiss franc as you would to the downside in Aussie dollar, Euro dollar, New Zealand dollar, pound dollar. And the last dollar pair we're going to look at is dollar yen. Again, I am bullish on dollar yen because I'm bullish on the dollar, I'm bearish on the yen. We might see a little bit more of a correction in US dollar yen before we continue to the upside. Having said that, FOMC next week is likely to play the pivotal role in this pair next anyway. We took out both targets to the upside last week. Any pullback into FOMC, and it looks like we're forming a nice bull flag here as it currently stands, is going to be viewed as the opportunity to look for a bullish breakout on FOMC. And I'm going to be looking up towards the 132.15. Next is pound CAD. Pound CAD was a short that we were looking at last week, and look at this sell-off right into the target at 1.59630, and that was pretty much the low of the week. We bounced. As it stands, this is just simply viewed as a correction, and any continued pullback is simply going to be an opportunity to look for another break lower. And if we can get this kind of a setup, I'm going to be looking further declines into the 1.5875. Another market where we took out both targets to the downside. I am still bearish on New Zealand CAD, not because I'm particularly bullish on the CAD, but because the Canadian dollar is set to outperform the New Zealand dollar in the scoring system. And so any pullback in this market is simply viewed as a correction. Perhaps we test a previous low. And then I'm going to be looking for a break lower and moves down towards 0.8238. Next is Aussie CAD, not highlighted in gold as one of my favorite plays next week because of the Aussie still being kind of bullish to neutral in the scorecards. That may change in the next couple of weeks. We could actually see the Aussie becoming one of the weakest currencies if the dollar continues its rally. Any pullback in this market is viewed as an opportunity to look for bearish breakouts. I'm going to be looking down towards 0.8977. And the final Forex pair here we're looking at is CAD Yen. We took out all three targets to the upside and we finished the week right at the third target. Any continued pullback in this market is just going to be treated as a big bull flag, and any break higher is going to be viewed as a potential opportunity to look for longs into the 103.45. Finish up with gold, silver, and Bitcoin. First of all, look at the gold-silver ratio. The gold-silver ratio is breaking out to the upside and approaching the 85.45. So really, you can think about this. I'm long gold, short silver vis-a-vis one another. First up is gold. I am bearish on gold. However, I would prefer to short silver. Why? Because we just discussed with the gold-silver ratio breaking out to the upside. Any pullback in gold is currently viewed as an opportunity to look for bearish reversals into the 1865.64. Next is silver. Last week I highlighted this in gold as one of the best plays, and I am highlighting it once again in gold as one of my favorite setups. We took out both targets to the downside, big sell-off last week. Going into this week, any pullback in this market is viewed as an opportunity to look for bearish reversals down to the 22.52. And again, I prefer to short this over gold. Next is silver versus euro. Now this is an interesting market, and I've highlighted this in blue because if for whatever reason we get a weakening of the DXY on FOMC and we see the euro strengthening, this allows us a bit of a plan B, because a stronger euro against a weak silver would provide the opportunity to look for further declines to the downside in silver versus euro. So if you get, like we had on last FOMC, the dollar selling off and the euro strengthening, you can look for any pullback in this market for an opportunity to look for bearish breakouts. And then I'm going to be looking down towards the next key area of support at the 21.20. And last but not least is Bitcoin. We came down and took out the longer term target here at the 38003.00, almost to the pip. I am still bearish on Bitcoin, especially with a stronger dollar. This is going to weigh to the downside, with stock selling off as well and Bitcoin's correlation to the stock market. Any pullback in Bitcoin is simply viewed at the moment as an opportunity to look for bearish reversals down to the next key area of support at the 34,410. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.